Welcome back to Brilliant Fools. My name is Adam Green, and on this Wednesday Q&A, I am going to jump into some questions about financial statements, give some answers, and hopefully these make sense. A lot of these, I've kind of skimmed them beforehand, but I haven't really dug into them. I want this to be a little more free-flowing, free-form. So, first off the bat, first question I have heard from many small business owners is, what is this report telling me? Now we went into a little bit of what the reports are good for, what they're used for yesterday, the day before, both on Mindset Monday and Technical Tuesday. But a lot of people, they just want to know kind of the big picture, and let me just see, okay, what does this mean? Like, don't get me super into the details, but what does this mean? And that's good. That's something that you want, a good financial sense kind of person on your side, a good accountant who can look at it and say, here's what I'm seeing that may cause concern. And whether that could be an outsourced CFO, outsourced controller, could be a good bookkeeper, could be a specific advisor, CPA, whatever, EA. There's a lot of different things, but if you are just looking for the big picture of what is this report telling me, and you don't know, then it's more than I could cover just in a quick answer. It's something that my answer to that would be, get a good accountant on your side. There are three people who can be extremely important in business. One of them is a banker. If you need financing for things, depending on your business, can be extremely important. One of them is a lawyer. Can keep you out of a lot of trouble in that case and save you a lot of money. And another one is an accountant, a good accountant. It's one of those things, I haven't even quite put my finger on it entirely yet, but they can make you so much more money than it costs them, or save you so much more money than it costs them. Either way, they can do both. And I think a large part of that is just because it's that quantum aspect of it, right? As soon as you start observing something, it changes. So as soon as you start tracking it, it changes. It's kind of like a diet. If all you did was just start tracking calories, did nothing else, didn't determine to go on a no carb diet, didn't determine a gluten-free, didn't determine this, that, or the other, you just decided, I'm going to start tracking something, it's going to change. It's just going to change. Second question, what's the difference between profit and cash flow? This is a great question. Many people do confuse that income statement, the P&L, which is profitability, right? Profit and loss, with the statement of cash flows, which is more like your liquidity. It's how much cash do I have on hand that I can use? But it's really a reconciliation kind of report as well. Your profit doesn't necessarily show where your cash is flowing. It's not necessarily going to say where the cash is in the bank. And two of the biggest areas that I've seen this in are, one is going to be loan payments. Loan payments don't go to the P&L. Actually, I'm going to say three biggest areas. So one is loan payments. When you pay on a loan or even on a credit card, that payment doesn't go to the P&L. Once you take out that money, so if you take out a loan, then whenever you spend that cash, it'll go to the P&L. But until then, it's going to sit over here on the balance sheet as a loan, as cash in the bank, and then you spend cash, you're going to take it out of here, you're going to put it on the P&L. Take it out of here, put it on the P&L. And that does not necessarily show cash flow, because you can pay that loan, but if you're paying that loan, it's just going to go from cash in the bank, and then it's going to go down to the loan itself, and that's going to sit on the balance sheet, never touching the P&L. Same thing with an asset. If you take cash out of the bank and you buy an asset, that sticks over here on the balance sheet. It doesn't go into your profit and loss. The depreciation on that asset goes to the profit and loss. The same thing with assets being things like equipment, large equipment, things that are expected to last over a year, vehicles go into that, buildings, things like that. And then I just thought of something. If you buy land, land is not depreciable. So that sits over here on the cash flow statement. You can buy land with a loan, not cash flow, the balance sheet. You can buy land with a loan and all of it sit there on the balance sheet except for the interest you pay on that loan. And that's the only thing that goes to the profit and loss statement. So even while you're paying off the loan, while you have the land, none of it's touching the profit and loss statement. So that's a big thing to understand. And then with a closely held business, the thing that I see all the time, well, this usually came at the end of the year. People are getting their tax returns done. This is why I hate seeing people only once a year. And if you do your work with me, bookkeeping and tax, I'm going to meet with you quarterly, at least quarterly. But people will take out money from their business and they'll take it out for personal use. So whether that's using the business card to pay for something personally, taking money out of the bank to go pay for whatever it is, transferring money into your own account, that does not hit the P&L. It doesn't. And you can have a lot more profit than you realize. I've seen 6 figures plus, multiple 6 figures worth of profit. And the owners had taken all that money out of the company to spend on their own personal things, had no money left to pay for taxes on 6 figures worth of profit plus. That's a big thing. That's a big thing at that point, especially when you're operating in that range where your profits, I'll say 6 figures or less. Let's put it that way. It can be a very big thing. Another question, why does my bank account now match my profit? You know what? I'm not going to go into that too much because we just talked about it. That's a lot of the things that go into it. It can also be when your accounting method is more accrual than cash. So you have accounts receivable, you have accounts payable, you have things like that. It could be timing issues. There's a lot of reasons why your bank account doesn't match your profit, but your bank account almost guaranteed will not match your profit ever. In other words, beginning of the year bank balance, end of the year bank balance, that difference does not equal your profit because your money is likely going somewhere else other than the P&L. So another question I've gotten is which report should I look out first? And that starting point, I think, depends on your business and your goals and what you're trying to find out from the reports. I don't even know that there should be a first. There's just a picture as a whole. It's kind of like saying, which puzzle piece should I put down first? Well, which one do you want to put down first? What's your goal? Are you one of the edge pieces kind of person, or do you like to put them all down based on different colors, or what is it? What puzzle piece do you want? The important thing is getting all the puzzle pieces in there so you see a full, complete picture in the end. Which report should you look at first? Most businesses like the P&L. It does give probably the most information to the management to be able to make the management decisions. But if you stop there, you are likely missing some very important information that could come into play. How do I know if my business is healthy? What are some key indicators to look at? Key indicators, key performance indicators, KPIs, things like that, they're good. They're good to have. But just throwing them out there is not. Again, decide the direction you want to go, decide why you want to look at these things, and then start looking at them is what my suggestion would be. So profit margin is great to know, absolutely. But are we talking about gross profit, net profit? What kind of things are we talking about? Talking about earnings before interest and taxes? I mean, what kind of things are we talking about? Liquidity ratios, debt levels, things like that, debt to income level, okay, debt to cash, okay. I mean, what is it that you're looking for and why? If it's somebody who's trying to build a business in order to sell it, they're going to have probably different KPIs to look at than someone who's trying to get a business off the ground just to grow it and make an income for their family. So those are going to be different kinds of issues. Let's take the debt to income ratio, okay? Because your debt may be high if you're trying to get your business off the ground because you need that initial capital to get going. And then once you do, you're good to go. And you can, or your debt to equity, anything like that. And then you're going to be able to get it off the ground. And there's nothing wrong with that. If it's still the case after 10 years of being in business, that may be something you want to look at, right? It may be a sign of robbing Peter to pay Ponzi or Paul. Yeah, pay Paul. I say that because that can be a way that people, let me just say this, having been in this business, having seen as many businesses as I have, having seen the debt floating and more debt to pay off other debt and this loan, that loan, reconciliation, consolidation, all this kind of stuff going into it. I can see where Ponzi schemes come about. I mean, I really can. People who never would go into it intentionally, and they end up doing it because they're just trying to keep up and trying to keep their head above water. And often it comes from not truly knowing what's going on, not having good records, and having a good control over it and decisiveness about what I'm going to do, determination on it. Here's another question. Why do I need a balance sheet if I already have an income statement? I'm not going to get too deep into that because we've already went through that, right? You're not going to know if your cash is going out to you personally if you don't have a balance sheet, if you never look at the balance sheet, if you only look at the P&L. It won't show you how much is going to you personally versus how much is going to pay off loans or credit cards versus how much is going into buying assets, et cetera, et cetera, et cetera. It's not going to show you the full picture if it's being done right. Now, if you're doing your own, you may have it all over the place, and then you're going to have all kinds of issues when it comes to tax time or when it comes to reporting for the bank. If you have any other kind of financing you want to get done, there's all kinds of issues that you could have there. So let's ask the biggest question that I think relates to the most people and should, and that is, what should I be looking for in these reports to make better decisions? I'm going to refer you back to Technical Tuesday. That's yesterday, because I went over a lot of that kind of stuff. If all you're doing is getting these reports together for compliance, it's that thing I have to do. I'm not worried about it. I'm making money, whatever. That's just that thing I have to do. You're losing out and you're in danger. That's all I can say. You're in danger. There may be a coming storm you don't know about that's buried in those books that you keep neglecting. Look for it. Not look for the storm like expecting a storm. Just look at the books with intention to run your business well, knowing that God is not a God of chaos, but of peace. He's not a God of confusion, but of peace. Knowing that if you ask for wisdom from God, he will give it to you, but don't doubt. And the further you go in your business without that, it's rare that I've ever seen anyone who's trying to grow a business have no doubt if they don't look at their financials. You have to look at your financials. But the things that you want to look at, like the exact kind of things that you want to look at, again, I'm just going to recommend look at the Technical Tuesday and look at that video, refer back to it from yesterday because it's going to have all of that, a lot of that in it as well. That's it for the questions today. And I hope this has been helpful, kind of shed some light here and there. And until next time, thanks.